Well, welcome back to Monica Pai Aiman here. Right. So if you look at the S&P 500 first, right? So yesterday, the major index took slight losses after it slipped around 0.1 percent, finding its technical support at the 50-day SMA line. So I believe the index was dragged down by the profit-taking activities after the recent rally in the mega tech giants, right? Specifically, if you look into Microsoft and also Oracle, after investors are worried on the AI valuation. So if you look here, Microsoft and also Oracle both took a hit and pulled back by around 10 to 15 percent drop recently after it crossed below the 200-day SMA line and now trying
Sorry,
to
Aiman.
test
The
the
screen sharing
previous low.
not coming out.
All right, so yeah, let's continue. Right, so also there's this news in the market saying that the Germans are abandoning its plan to build the warships. So this somehow has put investors aside and reassess the premium on the defense stocks story, right? Also, in the relation to this sentiment, many defense stocks in the US took a hit recently, right? And okay, so let's take a look at the US trading stocks that you have published yesterday, right? So we got United Airlines, right? So the stock is experiencing a breakout at $120 level. We can now expect the stock to travel towards the 128 on a strong momentum, followed by the next resistance at $136 dollar level. So now if the counter reverse, do watch out for the $112 level for the immediate support, as it could indicate a trend reversal signal. Also, we have CVS Health, stock code CVS. So looking at the chart now, the counter charted a high market structure forming a higher low formation to test the 105 dollar level. So if the stock to climb up higher, we could see that it might travel towards the $110 level. Now if the stock to slide lower below this $95 level, this might signal a shift to a bearish structure, right? So looking at the China A50 future as well, we closed slightly higher, just slightly higher on Wednesday session, mirroring a positive close in the mainland equities, where the Shanghai Composite edged up by 0.11%, and the tech heavy, Shenzhen components jumped by 1.2%. So from yesterday's sentiment, the China market, it was supported by massive institutional flows on the AI computing as well as the semicon stocks. And if you monitor closely, right, the A shares index for the past 2 months, we can see clearly that it's actually bouncing and giving into the market where the S&D is actually at equilibrium, right? Yeah, and if you look at the WTI future as well, it plunged over 4% yesterday, sliding to a post-war low to end at somewhere around $70 level. So this is after the rapidly improving supply uh, flows, right, enabling the steady resumption of the oil tanker traffic. So technical wise, if you see here, it has successfully breached our um, first support level, and now may trend lower to test the second support at $60 level. Um, Threshold, right? So on the sentiment side, of course, this risk premium is gone, but not fully, right? We're not talking about the initial first wave of the reversal trend. And let's take a look into our local market. The KLCI edged up by 0.13% to close at 1682 points on yesterday's session, while the FKLI index futures posted gains around 0.42% gains, arresting their recent declines. So if you notice, the small recovery was actually driven by the targeted insti bargain hunting in those whack down blue chip comps, right? Particularly across the defensive stocks like healthcare, telcos, FIs, which to me, this has garnered investors' attention after the pullback in the regional market due to the valuation concern. Um, we saw that the FKLI was steadily pointing upwards yesterday, and it is on track to test the psychological level at 1,007 points level. If the index managed to reclaim the 1,007 point level, we may see the next threshold is at 1,730 points level, with stop loss remains firm at $1,650 level. So now touch a bit on the heat map, right? So it is clearly uh, showing that the strong risk on rotation led by the tech and also the manufacturing sector, alongside with the um, healthcare and also selected property names, helping the broader market breadth turn positive despite the marginal mixed performance across the heavyweight banking counters on yesterday's move, right? Okay, so yeah, while we are positive on the Malaysia market, maybe we can suggest some names to you all. And I believe today we have highly demanded stocks, right? So we have KPJ Healthcare for today. So the stock is on its breakout formation higher at 3.23 cent level on a strong volume as well. So with that, we expect the momentum to keep bullish and the stock able to propel and test higher to 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 move towards the 3.40 cent, and second resistance is at 3.53 cent level. So if the stock to clear the 3.10 cent support, this could reverse the course and trend lower. And also next we have Gentech Technology. So the stock is experiencing a pending breakout formation at 31 cent level. If the stock to remain bullish, we expect the price to reach 33 cent level in coming session. Second resistance at 35 cent level. So do keep an eye at 29 cent support for any attempt of reversal. So today we have one breakout stocks, which is KPJ Healthcare, and one pending breakout stocks, which is Genetech Technology. So I think it's a good stocks to put in your watch list. And for the FCPO, right? So we saw rejection by the 4,700 level on the recent price action, which is it has a slight, I think, 0.54% to close at somewhere 4633 on yesterday's session. So the drop was mainly due to a notable retreat in the energy market as a whole, which also affect the palm oil prices. So I believe many of us understand that the FCPO is a two-way market. You can long, you can short, right? So for now, looking at the current price action, we are still holding a bearish bias on the commodity, targeting another um, 3 to 5% to hit the 4,500 marks level as a bigger picture, bigger picture trend of the market. So as the market remains volatile, we keep our stop loss level close at 4,700 level. Right. So that's all from me. Pass the floor to the next speaker. Thanks, everyone. Happy trading.
Thank you, Aiman. Good morning, everyone. We have a sector update for the healthcare sector today. We are still overweight. Topics remain unchanged, which is KPJ, LAC Med, as well as Duo Pharma. So this report is on the March reporting quarter. And that quarter results actually came largely in line with expectations. Structural trends remain intact despite seasonal softening, right? So Duo Pharma delivered a bit in expectations, while IHH, KPJ, as well as LAC Med reported results that were broadly in line with expectations. Post results, our earnings revisions were minor and largely housekeeping in nature. So there weren't any changes to our stock calls. Notably, we lowered our target price for Duo Pharma to 1.56 cents while keeping a buy, as we imputed a higher risk premium to the uncertainty surrounding the delays in the upcoming APPL tenders. As for healthcare service providers, as anticipated, the sequential weakness in first quarter was largely seasonal. That is exacerbated by the timing of dual festive celebrations, with your Chinese New Year, your Aidilfitri falling within the quarter, which resulted in softer occupancy rates. And based on our domestic healthcare tracker, which includes IHH Malaysia operations, KPJ, as well as Summary Healthcare, the first quarter sector revenue grew 11% year-on-year. That is underpinned by high inpatient admissions of about 2% growth year-on-year, as well as stronger revenue intensity, ranging from 6 to 12% growth year-on-year, depending on which healthcare service provider. Meanwhile, the aggregated EBITDA margin normalized 23.3% from the fourth quarter peak of 27.4%. But it's still expanding on a year-on-year basis by about 1 percentage point. That underscores the sustained cost discipline as well as structural top-line strength. So in terms of strategy for the sector, for the broader macroeconomic backdrop, economic backdrop, is becoming increasingly clouded by inflationary risks, geopolitical volatility, as well as prospects of the upcoming elections. But we believe that the sector's ability for hospital operators to actually pass on some of this OPEX inflation with limited impact to demand actually deserve greater recognition. So accordingly, we are staying overweight on the sector, which actually aligns with our core defensive investment stance for Malaysia, and view that the share price replacement of stocks under coverage from their peak as an attractive accumulation opportunity. So we have buys for KPJ, Duo Pharma, as well as LAC Med. In terms of stock pick, we are continuing to favor KPJ for its strong execution track record, scalable hub and spoke model, as well as the long-term earnings growth potential, driven by operational optimization as well as capacity expansion. And in our view, we do think that KPJ, they have the highest degree of operational flexibility within the sector to adapt to future structural healthcare reforms. So all in, our overweight stance remains anchored by the inherent inelasticity of clinical demand, which will continue to provide a defensive shelter against potential domestic inflationary pressure, as well as the volatilities, geopolitical, or the prospect of upcoming elections. For 2026 guidance-wise, there were no changes, and we do expect the earnings growth momentum to accelerate in the subsequent quarters. Right. So KPJ, we have a target price of 3.77 cents, LAC Med 1.16 cents, and Duo Pharma 1.56 cents. So all in, stay overweight on the sector. That's all from me. I'll pass on to the next presenter. Thank you.
All right. Good morning, everyone. Today we have a trading idea on ISF Group. So ISF Group is a piping solutions provider, which is for end user premises, which is for your buildings, be it your residential, industrial, and commercial, and even data centers. And I think a key thesis for ISF Group would be its increasing exposure in the data center piping space, given that data centers only contributed about 20% back in 2024, but now has reached to about slightly more than 50% in terms of revenue in the latest first quarter 2026 numbers. So, just to explain, uh, when we construct a data centers, there's like two stages. First stage is your base structure, which is your core and shell, mainly civil and structural works. And you've got system two, which is integration and system works, which part of it is your electrical and part of it is your piping and sewage systems. So um, so so in terms of margin difference, in terms of technical complexity and margin difference, of course, the one involved in system two integration works is has a higher barriers to entry, and hence margins tend to be higher. And for context, net margins for ISF is at about easily about 20 slightly more than 20% compared to normal core and shell works, which usually have a margin of around maybe 10% or less than that. So we take comfort from this. And and another thing to bear in mind, ISF is also, in the event that data centers slow down in the future, they are still able to, in a way, remain resilient in the event of industrial buildings or even residential buildings that were to have a high demand for piping systems, given that they are not just focused on data centers. And industrial jobs, also jobs, also tend to have a high margin compared to your commercial or even your residential jobs. And like what we highlighted in our previous thematics also, there's a very strong pipeline of data centers coming into Johor, roughly about 3.4 gigawatts coming in between now and 2030. And based on our estimates, that could potentially lead to about 2 billion ish worth 2 billion ringgit ish worth of piping works, given that in general piping works tend to be about 3 to 4% out of the total main contract value of a data center job. So in terms of valuation, we peg a target PE of 19.5 times to the FY27 EPS, and we view this target PE to be justified, given that it's still lower than what we ascribe to the main data center contractors. And this is to reflect ISF's exposure into the DC space, which we think is rather niche. And despite having a lot of non-listed piping players in the market, we understand that ISF is probably the largest in Malaysia based on our what data we have. And also ISF's ROE, which is easily above 50%, is even higher than the ROEs of your main data centers. So with that, we derive a fair value of 70 cents for ISF. So that's about it from me. I'll pass on the floor to the next speaker, Vanessa. Thank you.
Thank you, Adam. I'll be the last speaker for today. My name is Vanessa, and I'm from the Warrants team. So I'll be talking about the highly traded SKYECHIP warrants yesterday. So as of yesterday, we actually noticed that that's a very high traded volume in SKYECHIP core warrants. Of course, that's due to high trading volume in the mother share as well. So for the top two traded SKYECHIP core warrants in the market, SKYECHIP CM and also SKYECHIP CH, together we actually saw more than 50 million units traded. All right, so traded means like buy and sell, right? So for RHB, we actually have three SKYECHIP warrants, that's namely CF, CG, and CH. So for SKYECHIP CH is actually the top traded among these three. All right, so I actually put it, like I highlighted why people trade it mostly is due to, I mean, this is an assumption, but then the effective gearing is actually the highest among these three. All right, so the effective gearing is at 4.1 times. This actually means that this warrant could possibly move 4.1% with every 1% move in SKYECHIP mother share. All right, so this is an assumption. This is just an example how effective gearing works. And for your information, effective gearing will actually change from time to time. That's because of the movement of mother share, and if it's a few days difference, then it's due to time decay as well. And there's a lot of factors that will actually affect the effective gearing. All right, so if you are investing now, the investors cannot actually expect an absolute multiplier of multiplying effect of 4.1 times. All right, so 4.1 times effective gearing is actually for SKYECHIP CH. At the same time, we actually for SKYECHIP CH is actually one of the SKYECHIP warrants with one of the lowest absolute value. So absolute value means the warrant price law. So some warrant price like SKYECHIP CF is 25 cents, some is 16 cents, some is like 7 cents, right? So in this case, you actually see that CH has a relatively lower absolute price with a decent effective gearing. Okay. On the other hand, SKYECHIP CG, that's another one. This one, if you notice, is actually slightly in the money already because the share price is actually higher than the exercise price. This will actually cause the warrant to be more sensitive. That means it moves very fast. So you will see that CG price 16 cents, 16 and a half, or maybe go down to 15 cents in a faster way compared to CH. Maybe CH you won't actually see very frequent price movement, but then CG it actually moves faster, right, with the sensitivity of 2.7 ticks. So all this, right, sounds very you cannot imagine. So you actually have to use the price metrics, which is on the available on RHB Warrant website. So once you put all these three all together, side by side, then you'll be able to compare the price changes and also where your price will move for all these core warrants when the mother share moves, right? So yesterday, due to comparison to its, let me just share the website lah, easier on TradeSmart. So yesterday we actually see SKYECHIP mother share has been traded very actively during the daytime. It went up and then it came back down, right? So so we actually noticed CH will actually track the price of mother share. So it's a core warrant. If the share price drop, it will actually drop as well. If it goes up, like for example, nearly to the closing, it actually went up from 6.5 cents to about 7 cents. Yeah. So, however, if you are using a TradingView or TradeSmart chart on a core warrant, is actually not very applicable because this is the price that captured is actually the traded price. It's not the fair bid price. So if you want to know what is the fair bid of all these warrants, right, you have to go to the warrant website and then you can only see the fair bid at the end of the day. Like for example, the chart here, these are the fair bid close on the day itself. So if you're looking at this minus 7.1%, right, it's actually from the last closing price. Okay, so let's go back here. Go back to this chart. So for you, if you would like to perform a technical analysis charting on warrants, it's actually impossible. You have to do it on the mother share. And then from the mother share, you have you actually gotten what is the price to enter and exit. Then only you use the price metrics to identify the entry and also the exit price of the warrant. So yesterday we actually noticed the pattern of trading for SKYECHIP CH, especially. It's more like a scalping trade. So when people invest at 7 cents and will take profit at 7.5 cents. Yeah. So that's actually not so advisable if you would like to hold it for a few days, because for SKYECHIP itself, the mother share and all, it's actually relatively more volatile. And on the other hand, there will be this thing called the time decay. While SKYECHIP CH has a longer expiry date up to 17 December, there will still be time decay. right? But it will be very slow because it's still new, right? So if you are investing in warrants that is very close to the expiry, so let me explore a bit on the expiring warrants. So all these warrants that's expiring very soon, the last trading date will be 27 July. You have less than a month to trade. Okay, so all these warrants, if you would like to trade on it, then bear in mind that there will be this thing called the time decay, especially Top Glove C50 that we see it as one of the top traded warrants among all the stock warrants in the market. So Top Glove C50 is actually a very active warrant, but also expiring very soon. So if you are investing in it, you notice that it's actually very attractive with the effective gearing and also sensitivity. And you see effective gearing at 8 times and sensitivity of about 3 ticks, 2.8 ticks. It's very attractive to you, but then bear in mind that you can actually trade it intraday. That's more advisable compared to holding it for a few more days. All right, so that's all from me today, and all of us. So happy trading, and we'll see you tomorrow at the same time, RHB Morning Kappa at 8. Thank you.